The invisible bank. If you're using your credit card the same way you did in 2024, you're already losing money. You just can't see it yet. Here's how the top 1% flipped the system. Most people treat their credit card like a trap designed to keep them broke. And for 90% of people, they're right. But in 2026, the landscape has changed. Banks are quietly devaluing your points. But the loopholes for the top 1% are getting bigger. Today, I'm revealing the cheat codes to the money game. We're going to move your score from stuck to elite using specific maneuvers that require zero extra income. By the end of this 8-minute masterclass, you will have the exact playbook to turn everyday spending into a 24% return on flights and a mind-bending 48% on hotels. This is the mistake that kills your score. You pay your bill on the due date to avoid late fees, but that does nothing for your credit score. In 2026, scoring models are more sensitive than ever. Banks report your balance on the statement closing date, usually 20 to 25 days before your due date. If you have a high balance that day, the algorithm flags you as high risk, even if you pay it off tomorrow. The hack. Find your statement closing date in your banking app. The move. Pay your balance down to exactly 1%, around $50, 3 days before that statement closes. The result. You become a low-risk ghost. The bank reports almost zero debt, and your score can jump 30 to 50 points in a single cycle. Your interest rate is a negotiation, not a rule. Interest is the gravity keeping your net worth down. In 2026, interest rates are high, but the Fed is cutting rates. Your bank won't lower your APR automatically. You have to demand it. The action. Call the number on the back of your card and ask for the retention department. The master script. I see the federal funds rate has dropped, but my APR is at the 2024 peak. I've been a loyal customer for X years. Other cards are offering me lower rates or 0% balance transfers. What can you do to keep my business? The goal. Often, they will drop your APR by 2% to 5%, or offer spend bonuses to stop you from leaving. That is thousands of dollars in found money. Stop using one card for everything. You are leaving money on the table. In 2026, the game is about multipliers and category dominance. The food multiplier. Use a dedicated card for 4 to 6% back on groceries and dining. This is your permanent inflation hedge. The fuel injector. Use a card specifically for 3 to 5% back on gas. The everything else safety net. Use a flat 2% cashback card for boring expenses like insurance. Strategic cutting. If a card's hidden fees outweigh these perks in actual dollars, not just vibes, bench it. The industry isn't just about plastic, it's a data ecosystem. Banks now use behavioral biometrics, tracking how you hold your phone and your typing speed to verify identity. The hack. Use virtual card stacks for every subscription. The power play. If a merchant is hacked, they get a useless string of code. You can kill a subscription with one tap without canceling your physical card.
Advanced credit engineering and the wealth loop. 5. The inquiry shield and velocity strategy. Most people tank their credit score by applying for cards at the wrong time. In 2026, the algorithm tracks your credit velocity. The hack. Before applying for any new high-tier card, freeze your secondary credit bureaus like SageStream and ARS. The result: this hides minor inconsistencies from the main bureaus, making your profile look cleaner and reducing the impact of hard inquiries by 15%. The business credit firewall. If you want to win the money game, you must stop putting large expenses on your personal profile. The strategy. Even as a freelancer or side hustler, you can qualify for business credit cards. Here's the power move. Business debt typically does not report to your personal credit score. You can carry a balance for inventory or equipment on a 0% APR business card without it affecting your personal utilization or score. Phase 7. The authorized user. Power flip. You can piggyback off the success of others to jumpstart your score. The move. Find a family member with a 10-year-old card and a perfect payment history. Have them add you as an authorized user. The hack. You don't even need to hold the physical card. The age of that account is instantly added to your profile, which can jump your score by 40+ points if your history is thin. Phase 8. The shadow math of merchant categories. Not all food is created equal in the eyes of a credit card. The trap. Buying groceries at a superstore often counts as general merchandise, giving you only 1% back instead of the 6% you expected. The correction. Always check the merchant category code, MCC. Use specific apps to verify how a store is coded before making a large purchase. This ensures your multipliers are always active. The master loop. Generational wealth. The ultimate goal of the money game isn't just to save a few dollars. It's to use the bank's own capital to build your future. When you master the statement date and multipliers, you stop being a consumer and start being a strategist. The rules have changed. If you aren't adapting, you're falling behind.
The ultimate hack isn't points, it's automation. I've built a system that automates all of this so I never think about a bill again. Discipline is the final piece. Treat your credit card like a debit card. If the money isn't in your account today, don't put it on the plastic. Don't let the banks win. Subscribe to JV Explains Money, and let's get your math right. If you're ready to see how AI is now predicting your next spending mistake, click the video on your screen right now.